if you're in a location, if you have commercial property in a location that gets decent sunshine and you're not doing solar, you are missing out on one of the easiest ways to make money there is right now. I mean, consider you get a 30% tax credit, and with 80% bonus depreciation, you get a 65% tax deduction.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Tom Wheelwright is a tax and wealth expert. He's a CPA, CEO of WealthAbility. He's a rich dad advisor, an entrepreneur, international speaker, and the best-selling author of Tax-Free Wealth and the Win-Win Wealth Strategy. Tom, welcome to the show.
Thanks for having me, Sam. It's great to be with you.
Absolutely, Tom. The pleasure is mine. There are 3 questions I ask every guest who comes to the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Well, I started, I grew up in Salt Lake City, Utah. So I actually spent 2 years as a Mormon missionary in Paris, learning how to get rejected in French, which was kind of my start in entrepreneurship. And then started with Ernst & Young and built, sold CPA firms for the last 30 years. So right now, currently running a network of CPA firms around the U.S. We have over 60 CPA firms throughout the U.S.
Wow, that's a lot bigger than what I even understood here, talking to you before you came on the show. So you have I would say then you have a comprehensive understanding of what it means to build and scale businesses amongst real estate holdings probably as well. So that's really, really fascinating. Building and scaling CPA firms. What's the need in the industry? I would think inside the United States that, every town has its fair share of CPA firms. How are you finding opportunity in that space right now?
Well, the challenge is that CPAs, we have a weird industry. We sell something that people don't want, and we give away something they do want. So we sell tax returns, financial statements. Nobody really would do a tax return if you didn't have to. People need them, but they don't want them. And CPAs don't do a very good job of providing tax advice. They'll respond to your questions, but they really do not understand the tax law very well. And they do not do a good job of really taking a proactive approach to helping their clients reduce their taxes, which there are thousands of ways to do it. And most CPAs, unfortunately, don't do that. So it actually makes it for a pretty blue ocean for us.
Yeah, I would think so. Speaking of, on the blue ocean, the term blueprint comes to mind. It sounds like you guys have figured out a way to move into a city, set up an office. Here's how you do it. What is that playbook for you?
We don't set up offices. We've actually brought in members into our network that are all established CPA firms. And what we do is we train them and we provide a system for them. And then we do some marketing and sales for them. So we're actually their resource to be a better CPA firm.
Got it. And you mentioned there the 2 things, that I think a lot of times, and certainly been mostly my experience, is that the tax planning, the CPA side of it is a very reactive business. What do you guys do in order to make that a proactive, engage with your clients before that tax bill comes due? What's that look like?
We do a couple of things actually unique to us. First of all, with every new client, we actually build out a long-term plan of action for them, long-term strategy. We take a very holistic approach. We look at their really 4 areas of their finances. We look at their wealth. What are they going to do with their money? Which some of you specialize in, I know. We look at their income tax, but we also look at their asset protection and their estate planning, because you want to take a very broad picture if you really want to understand a client. And then we really focus on all the positive incentives in the Internal Revenue Code instead of worrying about the IRS is going to come get us. So we're looking for those things that the government wants us to do. things that they want us to invest in, real estate being one of those, and which one do they want to invest in. And if they're willing to do what, basically partner with the government as an active partner with the government, we'll show them how to seriously lower their taxes.
And that's I like the way you said that, the positive incentives that are out there. Because yeah, I mean, so many of us, we want to avoid, like, let's, I want to make sure that I don't get hit with that tax or get hit with this tax. But you're kind of turning that on its head and saying, how do we actually work alongside the incentives that are being placed out there to make this a more favorable outcome for us? Let's talk about those 2 or 3 things maybe that are on the top of your mind that you would say are some of the things that people should be thinking about right now. What's a hyper focus maybe for you and or your firms that you say, hey, here's advantages that can be had at the moment?
Well, we do a lot of work with real estate investors. Really, our primary specialty is entrepreneurs who also invest in real estate. And real estate, of course, it has had huge tax advantages for the last several years with bonus depreciation, right? Where we get to not just take it over 27 and a half years or 39 years in commercial property, but we actually can take a deduction for things like the contents of the building, the land improvements on the building. We can take that deduction immediately. So what that means is that for a typical investor, if there's let's say you've got a 75% loan to value, you're probably going to get a deduction equal to the amount of your investment.
Right.
And that's a big deal. I mean, you can put $100,000 into an investment and get $100,000 deduction. That's pretty cool. Only in the last few years have we been able to do that in the U.S. in real estate. It's gone down this year. So we were at 100% prior to this year. And then this year we're at 80% of bonus depreciation. But remember, we still get the rest of the depreciation and so forth. But what I find is that investors and a lot of syndicators do this. They don't do a cost segregation, which is required. Technically, it's required by law anyway. The IRS doesn't enforce that law, but it is required. And what they don't do is go hire an engineer with a CPA and go out and actually do a real detailed analysis. And because of that, they end up leaving a lot of money on the table. As you know, I think the most important thing in real estate is cash. And you've got cash to make the next deal.
Right.
And so you want your cash early. You want to be giving your money to the government, to hold on for you, right? You want to actually be using that money to invest more real estate. And frankly, they do too. I mean, that's the whole purpose of this incentive, is so that the government is saying, look, if you will go out and invest your money and do it the way we tell you to do it, then we will actually provide that cash. Will help you with that cash flow. You won't have to pay taxes now. You can pay taxes later, maybe never, depending on how serious you are as an investor. But definitely what we want is, we know that commercial property, we know that industrial property, we know that agricultural, we know that housing, these are all necessary and important to the economy in the United States. They're necessary aspects to our economy. And so we want to make sure that we take advantage of those and do the things that the government's really saying, these aren't loopholes, these aren't mistakes. We're not avoiding taxes. We are doing what the government has said is the law.
Right.
And that's actually one of the things that I'm really high on my mind right now, because we have so many people talking about the rich don't pay tax and they're not paying their fair share, which is they pay all of it. So that's hard to stomach, that they don't pay their fair share, because really the rich do pay most of the taxes.
Right.
And that, somehow that they're, cheating. Well, I'll tell you what, my experience is it's not frequently the rich people. I'm sure there are rich people who cheat on their taxes, but honestly, serious investors don't ever need to cheat because there's so many tax incentives.
Right.
So I think that cost segregation and just taking advantage of that bonus depreciation is number one in my book right now. I just think I'm seeing so many people not do it.
That's wild. Like, I mean, that seems like the lowest hanging fruit for any of us
Doesn't it?
Yeah, even in residential real estate. Like if you're a residential real estate investor,
Yep.
you can still get a
Yep.
cost segregation study done. And that
Yep.
and it's not that expensive. I mean,
That's
really.
right.
But let's talk about maybe that for a minute, because I will say I've had uh, varied successes with cost segregation reports. They can be wildly different, one firm to the next,
They
for
can.
the same exact property. How does an investor know when they're dealing with a good cost segregation firm?
Well, I think you can take some good rules of thumb to begin with. So on your bonus depreciation, I think as a rule of thumb, um, the contents of your building are probably going to be somewhere between 15 to 20% of the value of the building. And the land improvements are going to be another 5 to 10%. So you could be anywhere from 20 to 30% in that category.
Mm-hmm.
If you're down below that, then I would be concerned. If you're up above that, I'd also be concerned. So you got to watch it on both ends, of course, because like we like to say is that in taxes, pigs are cute and hogs get slaughtered. So you have to be, you want to be a little careful, but I really think that the most important thing, of course, you get a good referral. You get it either from your CPA or somebody, actually preferably your CPA, because they actually know the industry. And they're probably going to be the best. They're going to probably be the best referral source for you.
Yeah, absolutely, absolutely. Yeah, that's that's a big thing, and even an 80% bonus depreciation, still that's really strong, and something that I'm surprised to learn from you that real estate investors, commercial real estate investors, aren't taking advantage of that. That truly blows my mind, because that just seems so easy. Another one, maybe, that I think you and I talked about off air here, is the solar. You said that there is big opportunity in solar right now. Please do share detail.
If you're in a location, if you have commercial property in a location that gets decent sunshine, and you're not doing solar, you are missing out on one of the easiest ways to make money there is right now. I mean, consider you get a 30% tax credit. And with 80% bonus depreciation, you get a 65% tax deduction. So you basically get the 30% right off the top. So if you put $100,000 on a small commercial building, there's your example. Just did it on my building, and you that's $30,000 off the top of your taxes,
right? And
then 80% of 85% of the $100,000, which is about 65%. Okay. But that's just how it works. It's 80% of 85% because bonus depreciation. And then we actually get a haircut because of the credit. But that's about 65%. Well, if you're in a 40% tax bracket, that's a pretty big number. That's actually bigger than the credit. So really what's going on is the government's saying, well, we'll pay for about 2/3 of your solar. And then what you're doing is you're reducing your own costs, because here's the key, I think, to solar. You need to make sure that you're not selling that power to the grid. You want to make sure that you're using that power. And if you're using that power, you're getting retail prices for it, because that's something you're not paying, right? So you're getting retail prices. I know on my building, my return on investment is going to be somewhere in the neighborhood of 20 to 22%.
Wow. On an annual
because of the tax benefits.
Wow. I hadn't thought about the bonus depreciation side of that equation, because this is something we're working through right now on several properties and evaluating those and going, okay, so we put solar, you get the 30%, and then, but I hadn't put that bonus depreciation part back into that equation to see how much sense that does make. One of the other things that I'm learning here is that there's even, like, I know one of the buildings we were looking at has an even there's other economic bonuses inside of that, because
there are. So for example, first of all, with the solar, sometimes local utility will give you credits,
Mhm.
and they'll give you a rebate. So there's money there. Sometimes your municipality will give you a rebate, or your state. Remember, you got state taxes too, and bonus depreciation counts against state taxes as well in most states.
Yeah.
So that's an additional amount. You've got, there are other things you can do, of course, to the building, whether it's windows or, other things. They're not nearly as impactful on your taxes as the solar. But remember, the batteries count too. And the batteries are a key component, because solar without batteries is marginal. But solar with batteries is really good, because now you've got that storage, so that without that, you're actually ending up selling a lot of it to the grid, because during your high production times, you can't use it all.
Right.
And you need it when the sun's not out. So you can store that in your battery. I've got a couple of batteries in my house. I've got batteries in my commercial property. And the batteries, I will tell you, they're as important as the solar panels.
That's really interesting. Yeah, because the direct consumption model works, I guess, to a certain point, but I would only imagine, like you said, that the battery storage in the back end is one of those things that really makes the whole thing go round. And there's differences, from what I understand, in between. Some states are net metering. I don't think Tennessee is a net metering state. So I think, like here, I've learned this all here recently as we've been examining these products, going, okay, so they're going to sell it to us on the grid at 12 cents a kilowatt hour or whatever it is. I don't know. It was close to these numbers. And then if it goes back to the grid, they're only giving us 5 cents a kilowatt hour.
Right.
And
right.
Like,
so you don't want to going back to the grid.
No.
You want to be using all your solar. And if you've got a tenant, then what you want to make sure of is that the tenant's paying you. Right. So you actually are set up so that the tenants, because if the tenant normally pays for the solar, for their power,
right,
then you're not getting any benefit
right
from that. Right.
Right.
So what you have to do is you actually have to set it up so that you bill the tenant for their power, and the utility bills you.
Yeah. Oh, that makes sense. That makes a lot of sense. Do you know, are there, this sounds like it's getting more challenging, but are there, I would imagine there's software programs and things that you can build in that help you calculate that, and you're not going out to meters and writing things down and trying to figure out what the tenant actually bills you. Do you know anything about that?
Well, you would actually, you actually do effectively your own meter, right, so that you are actually taking advantage of and knowing what they're using, and you're billing them, whatever the normal utility rate is.
Right. No, that's very cool. I like that. And this goes back to the positive incentive things, because this is what somebody mentioned here to me recently. They said, look, they've figured out that it's cheaper and probably a faster implementation, because our electric grid is so old. I mean, it's so old. They said it's cheaper for homeowners to put and businesses to put solar on their roofs and help offset the cost of upgrading the infrastructure and producing more electricity, give it to them and then put some massive incentives on it. And maybe that'll help kind of stave off the need for immediate, reworking of the entire electrical grid. I mean, does that sound in keeping with what you've heard?
I think for sure there's that. And, that, I mean, the big problem is that if you're looking at from a mass standpoint and you're talking about energy usage, solar is not entirely predictable.
Right.
But with your own property, you're much better predicting that, right? You know what it's going to have, what your usage is. So it's almost like how blockchain is distributed right out to the end. And Bitcoin, that's what makes Bitcoin work. Well, this is really just you're distributing out to the end user. Mm-hmm. And I think when the end user takes care of it, then the utility just doesn't have nearly as much that they have to produce. They can now use their established energy for those special occasions when it's really cold or really hot. So that they can maximize and don't have to build so much.
Right. Right. No, that's really, really cool. Tom, learning a lot here today. Let's take a look really over the lifetime of your career. I want to ask probably maybe some more, things you've done right, things you've done wrong. You've built a lot of businesses. You've been involved in a ton of real estate. You've done a lot of things over the years. So if there was one thing that you feel like you've done really well in your career, and maybe one thing you feel like that was a mistake that our listeners could learn from, what would those things be?
Oh, wow. It's so hard to pull from all those different mistakes because I've made so many. I think the one thing that I've done really well is understood. I've learned what I really am good at and what I'm not good at. And I've stuck with doing what I'm good at. I find that the mistakes I make tend to be doing things I'm not good at, or thinking, this is tangentially related to, so I'll go kind of dip my toe into that. And for example, a good example was I got my Series 7 securities license years ago, because I'm going, financial planning, tax go right together, right?
Sure.
Yeah. But the thing is that I realized pretty quick that that's a whole separate industry. And I can't be really good at both tax and financial planning. Can't do it. So I very much find that the old saying, "a niche will make you rich," has been very successful. The real estate investors I know who are super successful, they are very niche real estate investors. I met one yesterday. Literally, I met one yesterday that he specializes in small bay industrial properties, 2,000 square foot bays. So these are industrial properties. These are like these are cabinet makers, people like that, right? That's all he does. He's worth a fortune. He's made a fortune in that specialized area of investing, and he doesn't go outside of it. And he stays in his, he can expand his market and, his location a little bit, but he stays in that business. So for example, we have software, but it's software for our CPAs to use with our clients. We have a software business. We have real estate, but the real estate is commercial real estate that houses, CPAs in our business. So we don't stray from what we're really good at. And that's where that's where I've actually been most successful. And where I've been least successful is probably getting into things that I'm just not good at. Like, I'm not a really good manager. I'm a much better leader than a manager. And so for me to be the manager is a really bad idea. And people are not going to like it. I'm going to cause problems. So
I like it. That's sound advice. Certainly appreciate you taking the time to share those. And that's something that I think all of us can relate to, especially the one about focus. Just zeroing in and staying there, and that's a challenge. That's a challenge for, I think, all of us. And
it really is.
Yeah, especially as an entrepreneur, we only see opportunity. It's like,
exactly, exactly. So literally, I'm at an event, a mastermind group yesterday with 80 entrepreneurs, right? And they're all doing different things. They all sound so exciting. They're great. And I've actually talked to one that is doing something that I've been interested in. Well, he's like light years beyond. It would take us years and we'd never catch up.
Right.
And I'm going, so let him do it. Right. We're way ahead in our industry. And, we're taking on industry that, taking on something that you're good at, that you really enjoy, that you thrive doing. I think that's what makes life great.
Yeah, absolutely. And that brings, us full circle to the idea of becoming a passive investor. Hey, if you want to participate in that cool business, let me be a capital provider, and you go do it, and I'll just watch. I'll get your monthly report, and it won't take any bandwidth from me. So that's
I do a lot of that. I now do a lot of passive investing for that reason.
Right. Because you can scale into things that you're interested in.
Experts.
Right, without being the expert. So that's very, very cool. Tom, I've enjoyed certainly our conversation today. Thank you for taking the time to come on the show and really give us some insight into where we can be taking advantage of the positive incentives that are inside of the tax code. Learned a lot from you, from your mistakes, from the things that you have done certainly really well. Thank you again for coming on. If our listeners want to get in touch with you and learn more about you and or your books, what is the best way to do that?
Really best way is just go to our website, wealthability.com, and we're happy to evaluate your prior year tax returns, take a look at them, see if there's something that we can do. If we can, great. If we can't, we will let you know. We only like happy clients.
Fantastic. WealthAbility.com. We'll make sure we include that there in the show notes. Thank you again, Tom. Certainly appreciate it.
Thank you, Sam. Bye-bye.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much and hope to catch you on the next episode.